Hello everyone, welcome to MediaNama. Recently, the Reserve Bank of India updated the guidelines for peer-to-peer lending on non-banking financial company or NBFC lending platforms. This could have a major impact on the future of digital lending in India. But before we get into the details of the new guidelines, here's a quick explainer on NBFC P2P lending. P2P lending or peer-to-peer lending has seen a major surge in recent years. Simply put, it allows individuals to obtain loans directly from other individuals without going through a bank or other financial institutions. So, what a platform does is facilitate and enable borrowers and lenders to connect and avail or give these loans. So, it was mostly popular for the sort of independence it gave for borrowers and lenders. It also at times allowed lenders to earn higher returns and borrowers to get lower interest rates as opposed to the traditional financial institutions. Now, the RBI already had set guidelines for P2P lending. However, on August 16, 2024, the RBI introduced some major changes. Firstly, it has prohibited platforms from advertising P2P lending as investment products as part of the Fair Practices Code. So, platforms can no longer promise things like assured minimum returns based on tenure or liquidity options and other such things. They also cannot guarantee any assurance or guarantee for the recovery of loans. The RBI has also capped aggregate exposure of a lender. So all P2P platforms have to cap the aggregate exposure of a lender to all borrowers to rupees 50 lakh. But that is provided that the amount lent by the lenders on P2P platforms is consistent with their net worth. So if the amount lent by a lender exceeds rupees 10 lakhs across multiple P2P platforms, the lender has to establish a minimum net worth of rupees 50 lakhs. This has to be done through a certificate they obtain from a working CA. Further, there are some due diligence requirements before providing loans. So the platform has to approve the recipients of the loan and the matching of the lenders and the borrowers as per the platform's board policy. Also, platforms must not assume any credit risk. That is, the lenders must bear the entire loss of principal or principal of interest or both. It must also disclose this adequately to the lenders. The RBI has also said that platforms can no longer sell any insurance products providing credit enhancement or credit guarantee. This comes after the RBI banned P2P platforms from entering into default loss guarantee agreements in its digital lending guidelines in September 2022. Basically, it banned agreements guaranteeing compensation up to a certain percentage of default. Further, the fund transfer between the participants on the platform shall be through escrow account mechanisms operated by bank promoted trustee from now on. This means that the function of a lender escrow account and a borrower escrow account shall be separate. Also, both these escrow accounts can retain funds only for a day after receiving them. Aside from this, it also added various transparency and fair practice requirements. The RBI called for an objective pricing policy wherein the NBFC P2Ps disclose the fees liable to be charged at the time of lending. These fees can only be a fixed amount or a fixed proportion of the principal amount. The platform also has to record details about the borrowers, including personal identity, and this has to be with consent, of course, the interest rate that has been sought, and also the credit score of the borrower. Customers can also file grievances now with the Reserve Bank's Ombudsman Scheme 2021. It also has obligations for a platform's public-facing operations. Platforms will now have to publicly display its portfolio performance, including its non-performing assets. They also have to cite their credentials at every stage or the customer interface, including on its promotional material and any other communication with stakeholders and participants. Platforms can also no longer outsource core management functions. These functions include internal audit and strategic compliance functions and the pricing of services and fees charged to borrowers and lenders. So these are the broad updates to the P2P guidelines. Now, this can have a major impact on P2P lending platforms, especially the restrictions on advertising as an investment, because that is a huge part of a platform's business strategy. They display on their platforms the returns one can get from lending, basically attracting customers and letting them know these incentives. Now, if they aren't allowed to do this anymore, they'll not be able to communicate those incentives and perhaps lose customers. And this has been something the RBI has been trying to do for a while, trying to deter platforms from advertising the practice of lending as an investment opportunity. Since essentially, if it's an investment, it's unregulated investment. Additionally, there are a lot of compliances for lending platforms now. Since, platforms both have to approve the lender and the borrower now. There are also tighter restrictions on whether it can cross-sell products. Like we mentioned, the insurance products providing credit enhancement or credit guarantee, and also the cap on the aggregate exposure of a loan of a lender. Also, additional compliances regarding the escrow accounts and all the various transparency requirements. So, with this massive upheaval of sales and communication tactics and increase in compliance measures, it will be interesting to see how the P2P lending industry will adapt in India. Thank you for watching. If you would like to learn more about this, check out MediaNama's website. And for more such quick takes, check out MediaNama's YouTube channel. Thank you.